So is the Canadian economy doing fine or not? We got all kinds of rate cuts previously in Canada that the Bank of Canada did. But what about the job market? Are we seeing robust job market, a robust economy? Are homes being sold at the seller's preferred price? Or are we seeing prices move down lower and inventory increase? Well, there's a lot that we can discuss about when it comes to the Canadian economy and the markets there, especially with Toronto Stock Exchange, and you have US equities continue to move up higher. The economy, on the other hand, when you look at the data, tells a different story. So let's talk about the jobs data that came out last week on Friday. And the employment report from Canada basically came out at negative 41,000. So the employment report for July saw 41,000 jobs being taken away. And this basically partly offsets the 83,000 jobs that were added in June. Now this decline that we saw in the report in July was basically concentrated in full-time work. Makes sense, right? Because although people might be looking for more part-time work and you might see some increase maybe in part-time work, the full-time jobs are being slashed because cost cuttings, cost savings are needed for a lot of these companies. And we've been hearing it not only just in Canada but in the US as well when we look at many of the big tech firms. So the employment numbers for the full-time definitely doesn't look good here, especially when you're comparing this report July versus the previous one in June. Now, what's very interesting in this report as well is that when you see the employment decreases among youth, they're getting worse off as well. So when we look at charts like, for example, here, the unemployment rate for Canada, 15 years and older, sitting at 6.9%. 3 years back, this was sitting here at 4.8%. So we saw quite the increase, about 2% increase over the 3 years in Canada. Now, when you see an increase like this, generally it's a telling sign that the job market is getting worse off, and generally we tend to see this eventually escalate further down the road because there is an expected recession to come, or we're already in a recession. So when you see such a move like this in the unemployment rate, it's not a very good telling sign, especially when it's above the 2017-2019 average, which is around 6% here. Now, what's getting worse is if you break the age groups from 15 years to 24 years, the youth, the unemployment rate has just recently moved up even higher. So you see it's at 14.6%, versus before it was kind of capped around the 14% level. But, you know, summer, we're in summer right now, and a lot of these students are on summer break looking for jobs, and they're unable to find those summer jobs, and it's getting harder for them. And we're seeing that youth unemployment rate move up and tick up higher. Now, could this change later when they go back to school? I mean, probably, maybe, but let's see. But definitely the youth are having a tough time finding those jobs. The core age of 25 to 54, a little bit better than the average, but sitting at 5.8%, still not as good when you look at the 2017-2019 average of 5%, a little bit above 5% here. And then the 55-year-old years and older is ticked down a little bit to 5.3%, but it's hovering right there at the average. And it's expected when you look at the age group, right? For the youth to see this number of 14.6%, the core to be better, and the 55 years old to be 55 years old and older to be much better. But what's not normal is when you see quite the distance and gap from the average, and most importantly, Canada's national average of 6.9% continuing to tick up higher and higher. Now, I don't know if I can pull it up here, but if I look at the unemployment rate from this chart, 6.9%, and COVID's was 14.2%, right? And we did see 7% not long back in May. This is basically half of COVID's unemployment rate. And we haven't even signaled an official recession. And we're already half of the peak of COVID. What do you think is going to happen if we continue on this trajectory? If rates continue to stay where they are? Well, in fact, even if you do get rate cuts, is it going to solve or make things any better? Because we did get rate cuts. Rate cuts from Bank of Canada, they slashed rates from the peak till now about 50%. And we heard from a lot of people saying that, oh, the housing market's going to go crazy, people are going to start buying and the economy is going to be fine. Well, we've been getting rate cuts and none of that has happened. In fact, quite opposite. The job market continues to get worse and worse. And just recently, we just saw about 41,000 jobs being taken out. Now, when we look at other parts of the employment numbers, we can break it down and see what did better and what did worse, right? So when you look at transportation and warehousing, that was top on 26 in the thousands jobs being added. You have the educational services second, other services third, and so on, right? Accommodation, manufacturing. But the ones that did worse was information and cultural and recreation. Construction. Now that's a telling sign. When you have construction slowing down aggressively, generally construction tends to be the lifeblood of the economy. When things are doing well, you get a lot of construction. Also in recessions as well, when you want to bring back an economy, you also do a lot of construction work as well. But we're seeing a big slash and it's in second compared to the information, culture, and recreation. So we got second here in construction, third in business and building other support services, then the healthcare industry. Well, that's no good, right? Especially if Canadians require healthcare, and being Canadian, we can already see how today's healthcare industry is and how poorly run it is. But anyways, agriculture, right? And then finance and insurance. So these are the employment change that, these industries here that are most affected versus the ones that are better here. So definitely construction we do depend on, definitely businesses, building, support services, right? Finance, real estate, leasing, starting to feel the pain, healthcare. A lot of those jobs being slashed out in this July report. Now, when you look at the territories, right, Ontario, we did see an increase to 7.9%, right? The national average is about 6.9, but Ontario's sitting almost close to that 8%. BC is about 5.9%. Alberta, 7.8%, right? Newfoundland, 10.5%. PEI, 8.8%. You can see the numbers depending where it is. Yukon Territory is much better, 3.5%, but all of them are reaching closer and closer to that 7% level, making the average around 6.9. But the major ones, like Ontario, BC, heavily affected, Alberta as well affected, Quebec affected, 5.5. Definitely creating pain for a lot of Canadians out there. Now you can also break down the major cities, right? Montreal, the unemployment rate sitting at about 6.3%. So down from the June's number of 7.2%. So that's a quite of a big drop there. Toronto's unemployment rate from 8.5% up to 9.2%. So Toronto's feeling the heat. And Vancouver going from 5.8% up to 6.1%. So Vancouver, Toronto under pressure, Montreal a little bit better there. But the two major cities for sure, Toronto, Vancouver, especially Toronto, getting worse off, close to that double digits of 10%. So overall, when you put it all together, the jobs number, yes, we're still sitting around 6.97%, the unemployment rate, but when you're looking at it as a whole, it doesn't tell a very good sign or a telling sign that the economy is getting better or the job market is getting better. It's getting harder for the youth. It's getting harder for the new immigrants coming in looking for a job because the jobs numbers out there are getting worse off. The youth unemployment rate also worse off. And it's all because of all this tightening that we did after post-COVID, after all the money printing that we did, but this tightening of higher rates and basically putting a lid on all the activity that we saw during COVID and keeping people in the dark of, when are we going to see good times again? And I think we might see a continuation of tough times until we get maybe rates back close to zero, but, with the big but, some more stimulus and money printing. But what is it that's going to finally kick the can and cause the economy to really fall into a recession? That I don't know. And that we'll have to find out later as the years and months passes by. Could it be Donald Trump's tariffs? We did hear Bank of Canada say that it could cripple Canada. And we've already got those tariffs and we're already feeling the pain. Let's see if this materializes or if it's true or not. Or do we just go through a time of just stagnation here, stagflation here, and then we just get better afterwards? That we will tell and wait and see until the time comes. So until then, let me know what you guys think. Leave a comment below, subscribe, hit the like button and bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.